Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Monday, May 24th. Markets are up today. Okay, markets are up. Dow's up about 200. NASDAQ's up about 200. Why are the markets up today? Well, over the weekend, the Fed came out and they said that we should lower our expectations for the economy. Now, not lower our expectations for the stock market, but lower our expectations for the economy. Now, normally when a central banker comes out and says to lower your expectations for the economy, the stock market would go down with it, but not in this crazy world that we live in right now. When they say to lower your expectations for the economy, that means that they are going to print more and more and more money to stimulate the economy. So the stock market goes up 200 points on the Dow, 200 points on the NASDAQ. Now, nothing serious, but isn't that funny how when you get the bad news about the economy, that stock market starts going up. Okay, we're getting close to the end of this. Do not short this market right now, but we are getting close to the end of this. A lot of investors are catching on to what the Fed's going to do. They see that inflation is coming. Inflation is coming into the markets. Inflation is coming into the commodity markets. You have lumber prices going up record highs. You have corn, soybean, wheat, food prices hitting record highs. The inflation's there. These commodity prices are going up 50, 100% just in the past year. But they tell you inflation's only at 2%. How can they be so wrong on this? Well, investors are starting to realize that the Fed is not going to do anything about this inflation. Normally, if the Fed saw inflation coming, they would raise interest rates. But the Fed cannot raise interest rates. Why? Because we've borrowed too much money. We couldn't pay our debt back if they raised the interest rates. We can't pay our debt back anyways, but at least right now we can service the debt. We can take all of the money that comes in the form of taxes and pay it out as interest on our debt. Okay, so if interest rates go up, we default on our debt. Can't let that happen. We got to keep interest rates low. We got to print more and more and more money. That's why you're seeing the market go higher and higher and higher, but not so fast. The VIX volatility index has come back in. It's come back in a lot. Now, I looked at the options on the VIX volatility index, and if you go out 1 or 2 months, you will know that calls, meaning they're betting the VIX to go higher, are trading for about 2 times as much as a put, meaning the VIX to go lower. People think the VIX is going to go higher over the next month or two. And nothing major, but they do think it's going to go higher, which means the market is going to come in. Market's going to come in some more. Now, this is okay, but they're not predicting a crash or anything. As a matter of fact, they're kind of predicting that the market's just going to be stagnant for the next month or two. We'll see how it all plays out. Now, over the weekend, I went and visited my mom. My mom lives in Lincoln, Nebraska, and I went and visited her. I had to catch 2 plane flights and then rent a car and then drive an hour from Omaha to Lincoln. Now, prices. I want to talk about prices. Have you priced airline flights? Oh, my goodness. There's a lot of inflation. A lot of inflation going on in the airline business. Look at what was before COVID was about $350, just double it. It's about $600 or $700 right now to get those same flights, and the flights were full. I had 2 flights going, 2 flights coming back. All of them did not have 1 seat available, and people were waiting to try to get on standby. They were full of people, but these high prices. Okay, what about rental cars? Oh my God, I had to rent a car in Omaha. The cheapest car I could find was about $150 a day. And when I got there, they tried to talk me into taking a van because they didn't have any cars available. I didn't want a van. They wanted me to pay for the gas. I didn't need a big van. A 15-passenger van's what they wanted to give me. They didn't have any rental cars. I go, I reserved a rental car. Give me a rental car, and they finally did. But $150 a day for a rental car, this would be normally $50 a day. So rental cars tripled. Okay, this is inflation, 2%. I don't know where they get that 2% number from. All right, so what do we want to do when we have inflation? When we have inflation, we want to protect ourselves because the Fed's not going to protect you. They can't. They can't raise interest rates. They're not going to protect you. So you have to protect yourself. Okay, so how do I protect myself? Gold, silver, and even Bitcoin now that it's come back in. Bitcoin, I like it around 30,000. It's up here, I think today, 37,000. You know, I think it's still you're going to get another opportunity around 30, maybe even into the 20s. I like it down there. Now, look, I'm not saying that it's someday it may go to zero, but I do think it's going to 100,000 first in this environment with the Fed just printing money like crazy. They're going to send these assets higher. But I do feel much safer in gold. Look at gold trading around 1880 today. Okay, Bitcoin up here at 37,000. I think gold's the new Bitcoin. Have you seen the recent price patterns in the last 2 months? Bitcoin came 50% off sale. Gold is just in this bull market. And the bull market in gold is just starting. Now, do you realize that some people have price targets on gold as high as 50,000? Does that mean that gold is going to be like Bitcoin and go to 50,000? And maybe Bitcoin becomes like gold and goes to 2,000. I know I get hate for saying that. These Bitcoin people, they're passionate. And I love Bitcoin. I make money trading Bitcoin. I jump in and out of it. I am not a holder. I don't understand this holding thing. You know, they talk about having diamond hands. They talk about having paper hands. Right now, a lot of Bitcoin holders, they're having broke hands. They want to buy more, but they're already broke. They don't have money to buy the dip. They bought the dip and it dipped some more. Okay, now I'm not laughing at them. Bitcoin can move 80%, 90% on a dip. It's done it 5 times already in its lifetime. Maybe this is an 80% dip, which would take us down to around $12,000 on Bitcoin. I don't know. I like Bitcoin because of what the Fed is doing. The Fed is going to print money and it's going to send Bitcoin much, much higher. Now, it may come into 20,000, may come into 12,000, but these would be incredible buying opportunities, in my opinion. Bitcoin is not done. Bitcoin will still see the day of the run up to the $100,000 level. I believe that because the Fed's going to keep debasing our currency. Our currency is not going to buy anything. The money you have in your wallet is not going to buy as much as it did before. Every day it gets less and less. Now there's some ratios. Okay, the gold ratio to the Dow's trading about 34.4, gold's trading about 1880. The ratio is 18 to 1. 18 to 1. Now when the gold bull run ends, which is just starting, when the gold bull run ends, mark my words on this, it'll be 1 to 1 with the Dow. Now will that be at 50,000 when the Dow trading 50,000 and gold trading 50,000? Or will that be down at 5,000 with gold trading 5,000 and the Dow trading 5,000? Mike, are you crazy? The Dow could not come down to 5,000? Sure it can. Heck, just 12 years ago it was at 6,000, right? Okay, could it go back to a 12-year low? Absolutely could. Do I think it's going to? Not with the printing of money. We're getting this crack up boom, meaning things are just going up and up and up. We're having this almost a hyperinflation in assets, in the asset market. Now, okay, what is the best asset to buy right now? I think it's silver. Now, we talked about how the Dow is trading 34.4, gold's trading 1880, and that's an 18 to 1 ratio. Okay, that's going to become 1 to 1. But look at the gold trading at 1880 and silver trading right around $28. Okay, 1880, $28. It's a 67 to 1 ratio. What's a normal ratio? Normal, maybe 30 to 1. Okay, so it's the ratio is going to get cut in half. I mean, silver is going to outpace gold by at least 2 to 1, but it might even be a 15 to 1 might be normal. Okay, and that would make silver outpace gold 4 times that gold. Anyways, we're at 67 to 1 right now is the ratio, but I think we're going to come down. I think that ratio is going to come down to 30 to 1, maybe even down to 15 to 1. In other words, silver is going to catch up to gold, and gold's going to catch up to the Dow. It's just crazy times when you have this inflation taking hold, and people are starting to notice. Traders are starting to notice. In the last month and a half to 2 months, gold has just been taking off. It's outperformed. It's outperforming the stock market. It's definitely outperforming Bitcoin, and it's starting to gain on these other commodities that are already up 300-400%. Gold hasn't made the move yet. Gold's just starting to move. Now, can gold pull back in? I hope it does. I hope it does. I want to get some more. I don't have enough. I want to get some more. I get greedy at these times because I can see it. I can visualize. I can see it out there. That bull market is just getting started. Just getting started. Well, that's all I got today. It's Monday. I'm Tall Mike. If you like this stuff, give me a thumbs up. If you really like it, hit that subscribe button. I don't have many subscribers. I'd like a few more so I can talk to you, so we can get the word out, so we can protect people from the Federal Reserve, the Fed. Protect you from the Fed. Anyways, get out there. Have a great Monday, everybody, and we'll talk again real soon. Bye-bye now.